Hello and welcome. We're just going to wait a few minutes to let everyone come to the room. I hope you're excited as I am about this panel, Sustainability and Blockchain. And we have three amazing speakers here today. Are you enjoying the FinTech week? It's unbelievable. The quality of the events that we have this year, the depth of every conversation. So if you want, why don't you send some great comments about the events you've been participating, and so we can send some really good vibes to the people that have made all of this happen. You can use the chat.
Rachel is mentioning that we can start already.
I think I'm just going to wait a few more seconds and then we can get started. People are coming in. So something that you probably don't know, but you can guess from my accent, I am Italian. And today we have three speakers and they all come from different countries. So this is a very international panel. Okay. I think we can really get started. Okay. Awesome. So again, welcome to this event. We are going to discuss about how great green investment boom is driven by blockchain. Today with us, we have three panelists. The first one, Francisco Benedito Valentin, CEO and co-founder of Climatetrade. Francisco is from Spain.
Hi, Stefania.
Hi, welcome. In 2017, he founded Climate Coin, the world's first crypto asset to address climate change, recognized by the UN, United Nations. And in 2019, he funded Climatetrade to establish a marketplace centered on sustainability. Something that you don't know about him is that he's a collector of shampoos and cosmetic products. We hear some people laughing. But why?
It's because I take care a lot of about my hair. I never find the perfect recipe, So that's funny.
I see. I love it. Thank you for sharing this with us. See, sometimes it's important to know more than just what these people, what us, our speakers do, but mostly to know who they are also in their personal life. I love this obsession that you have. I really do. And then together today with Francisco, we also have Thorsten Peisl, founder and CEO of KALYP Technologies, directly from Austria.
Good afternoon. Good morning, everybody.
Super excited to have you. Thorsten has spent over 2 decades in security in the financial industry at global firms like State Street and Deutsche Bank. He's an engineer by education and has worked and lived in Frankfurt, London, New York, Boston, and Singapore. He grew up in Austria and loved to jump in the alpine cold water lakes. That's kind of freezing.
It is, and I try to convert my family and my wife to come with me all the time, but I don't.
How does it go?
She's I can imagine that I'm converting into a kind of a mini Wim Hof who is ice bathing or something like that. But yeah.
Nice. And definitely last but not least, Sean Ford, COO of Algorand. He is responsible for go-to-market execution and operation, including product management, engineering, marketing, and global community development. He has an MBA from Harvard University. Welcome, Sean.
Thank you for having me, Stefania. It's nice to be here with you, Thorsten, and you, Francisco.
And something that also you don't know about Sean, he can run at 30 miles per hour. Now you really have to tell us how can that happen?
It's a short story. It was pushing a car with a friend of mine that was in neutral, and the car started to go down a hill fairly rapidly, and I was running alongside of it as I just tried to keep my feet under me. And at one moment I glanced and saw the speedometer and it said 30 miles an hour. And I thought, I can't believe I'm running 30 miles an hour. And then I jumped in the car and hit the brake, and that was fine. But that's the story.
Oh my God, that's definitely a story. Okay, I was thinking you kind of exercise and, wake up at 5 a.m. and go running.
No, I do all that, but 30 miles an hour is pretty fast.
All right, guys, let's really go and deep dive into today's conversation, blockchain and sustainability. Is this an oxymoron or a panacea? A lot of people still don't fully understand how blockchain can really drive positive and social change. Now, blockchain, in my mind, comes with two key powerful components: decentralized networks and transparency. Because on blockchain, every transaction is verified by multiple parties, and no one is actually able to edit the data without altering the entire system. But it also incredibly transparent because unlike algorithms from big tech like Facebook that are kept secret and keep changing, everything on blockchain is public available. Now, how all of this new technology can really be a powerful tool to drive social impact? Who wants to start? I really want to address this question to everyone here today.
Well, you go, Sean, if you want.
No, go ahead, Francisco.
Well, basically, like blockchain is the perfect ingredient for social impact. We need transparency, as you said, and we need traceability of funds. No, until today, and to my area of expertise in the climate markets, you needed to know where the funds were going, because at the very end, you don't know if that's going to be generating positive impact or not. So in order to generate a positive impact for the planet, you need to see where that money is going. And blockchain is a perfect instrument for that. No? So that's exactly what we do with Algorand and in Climatetrade, no, using their technology, no, in order to use the less polluting technology, blockchain technology, and providing that transparency and traceability.
Yes, Sean.
I would think so. Sorry, I was on mute. I agree with that. I think that from my perspective, not all blockchains are created equal. And so, I think a lot of blockchains, certainly proof of stake blockchains, tend to be more energy efficient, but they need to be designed from the beginning for sustainability. That's a particularly important philosophy that I know we brought to bear, but I think all new technology should really factor in. And I think the other thing blockchain does, in my mind, in addition to transparency, is it allows for a greater individual accountability and awareness and participation. So, where sometimes people have, they look at, solving sort of climate issues as a giant problem they can't have an effect on. Blockchain allows for sort of fractionalized participation, individual participation, ways everyone can contribute to the collective good in ways that traditional financial systems and technologies do not.
Yeah. From my point of view, again, thank you, Stefania, for introducing myself and all the fellow panelists earlier. My background is security services, so the wholesale industry. So I'm more on the institutional side than on the retail side. This is a highly regulated market, the market that we talk about, the securities industry. And we personally, myself and my business, we see blockchain as a better way to jointly manage data, jointly manage trusted data. And what is very important, we would like to introduce the concept. There's two types of blockchains, the permissionless and the permission chains. Algorand obviously is a permissionless and a public chain, and it has very powerful and many use cases that it is ready and made for. There are other use cases in other areas where permissioned blockchains are more suitable, especially when we talk about regulated markets where privacy requirements play in and regulatory compliance need to be achieved, which again is more from my point of view the wholesale capital market. So I think both type of blockchains have their space and will coexist and interoperate in certain areas. But I think for the capital markets and securities markets, where trust, where privacy, where borders do matter today and in the future, I think the permission chains have a very important role to take. And also the permission chains in the context of just how they are being built are super efficient from an energy point of view, since some of my co-panelists have brought that point up. It's just different way on how you can build them.
This is so right. Guys, this was just a warm-up question because you touched base on so many points, and now we're going to actually go deeper and deeper. One of this was building securities, like with the idea of driving social change. Recently, I was reading about how the intersection of newer financial tools and technology can really have a big impact and unleash the sustainable revolution. It was an article published by the World Economic Forum. And so with that in mind, I really want to ask, how can really blockchain and digital security play a critical role since day one, since we start building the new securities? And maybe if you can, guys, provide also some example. Sean, do you want to start?
Sure. So I think you've touched a little bit on what blockchain can bring, and certainly a public permissionless and low energy consumptive blockchain can really do. I think at Algorand, ironically, we have a very strong footprint of a few dozen securities that have been issued on Algorand, and we sort of built ourselves up for the idea that if you can make something public and permissionless, and you can provide appropriate technology to allow for privacy and transaction finality, and do it in a decentralized way, which is, I think, more secure than a lot of centralized systems, that you can drive significant inclusivity. And why does that impact the social revolution? Well, there are several billion people in the world that are unbanked, for example. They don't even have access to a simple checking account and to earn any interest or participate in any form of upward prosperity. Or the money supply itself is in many ways one of the most insecure sort of assets in the world. Paper money and the risk of all sorts of bad things that can happen with that. And because of that, I think that blockchain, by driving broader participation, by allowing everyone to participate in upside prosperity on some even simple level, it raises the sort of rising tide, lifts all boats within a country, and can really harness a lot of the innovation and the spending and the participation of people who previously have been excluded. So I think that only leads to me to more transparency, more participation, and the opportunity to really create some interesting things to drive positive social impact, like, for example, Climatetrade.
Yeah, thank you, Sean, because exactly is like the use cases that we are mentioning. I mean, fragmentation, for example, of like the possibility of giving access to people that do not have access to banking, that do not have even a bank account, and possibilities of getting funding for their projects. One of the big issues in climate change also is the lack of funding of certain projects that they don't have that ROI that clear, but they are a real solution for climate change, like magnificent technologies and projects that do have. So we can, like if you imagine like a green bond. I'm a banker also. I've been working in financial sector for 15 years, and you always see that all the projects, renewables, solar, wind, thermosolar, they get really project finance funding very easily. But we have really big problems to come to smaller projects that really make a change, no? That can be a scale. So tokenization, blockchain is perfect for all this. And in the other side of the equation, imagine green bonds that you aggregate a lot of money in one green bond from a big company, but in this case you can separate that and disaggregate it for many people, contributing to the same cost. No, so that's all in the same line. No, and that's something that blockchain and all the new projects that are coming with Algorand that are making possible to funnel funds towards new initiatives that can solve problems, real problems for the world.
Yeah, if I can bring in some perspectives from the institutional side of the equation. Again, KALYP is establishing smart financial networks for more efficient processing of securities. So it's being run by custodians, transfer agents, registrars, and the likes, as mentioned earlier. And today I'm super excited to be here because we run and we support multiple networks. And two of them specifically are relevant for our conversation today. One of them aims for improving wealth creation. We do this by bringing foreign securities, publicly traded securities, more efficiently into the hands of US investors. So US investors simply need to order different QSIP, a digital security with its own QSIP that will be delivered in their existing custody or brokerage account. And because of the back-end infrastructure that we're establishing, those securities come with lower transaction costs, which benefits the investor, which comes with faster cash distribution. So when a foreign company is paying the US investor, they get it between 2 and 6 weeks. We can reduce that to days, so you get the money faster, and we convert to more competitive FX rates. So at the end of the day, more money, faster money, at lower transaction fees. And in addition, we aim to extend a wider set of shareholder entitlements, so shareholder rights. So you can, as a US citizen, you can control, or a US institution, you can have influence over the foreign company. This is great because institutional investors have investment compliance criteria that say, if I need to invest or would like to invest in public companies, I need to be able to vote on those companies, right? And in many cases, these voting rights are not extended these days. So we open up a wealth of diversification for institutional investors and retail investors in the United States through those networks. And in addition, we make sure that they have a high return with these digital securities, with these securities in digital format. The second network that I think is highly relevant to me and today helps to accelerate the path to carbon neutrality. We are working on a concept that we call carbon neutral shares. So companies that are not carbon neutral today, large corporations, we can help them to convert their existing traditionally traded share classes into carbon neutral shares by bundling the traditional share up with a pool of carbon offset instruments, and it's all traded in one security. So these obviously have direct impact because we share the burden of achieving carbon neutrality between the companies and investors.
I love it. I love it, Thorsten. Thank you so much. Thank you so much for sharing, in an even more concrete way, exactly what you do. And that's why now I want to ask Francisco, sorry to interrupt, but I want to ask Francisco and Sean to tell us more about, in their role right now at their company, what action are they taking in a solution and products to really drive this change? Because I really think that, change happens when bright minds like you take actions. So really tell us how you define your role in the effort to reduce environmental impact and increase social impact.
So,
thank you, Stefania.
Oh, go ahead, Francisco. Go ahead.
No. I thought, go ahead, son, please.
Where you could tell Francisco and I go back a ways. So I would say, look, very simply for Algorand, we began with a goal from the beginning. Silvio Micali said we're going to be a sustainable blockchain We launched and built ourselves that way. We're actually the first blockchain to declare carbon negativity, not neutrality. We're over investing in the energy production of our global network in advance of the expansion of that network to always make sure our footprint is ahead, or I'm sorry, our footprint is ahead. So we're offsetting more than our actual footprint at any given time. We're committed to doing that for as long as we have a network. And I think that I would challenge every other blockchain to try to follow that lead. There should be no trade-off between innovative technology and sustainability. There's no excuse for it other than a lack of innovation or people who are largely set in their ways and are unwilling to shift their business models to achieve it. But that has been wiped out. And I do see one of the audience questions was about, how do you think about examples of blockchain bringing in green tech? Well, you've got, at least 3 people on this panel who have good examples of that happening. And I think that, Algorand has 6 or 7 fairly interesting sustainable projects. And one very quick one is just, there's a project out there where people are buying NFTs, and for NFT that's purchased, a tree is planted. And so there's just simple ways to gamify collections of digital assets with strong sustainable use cases. Obviously, Climatetrade is an innovator and sort of more directly impacting that issue. But there are innumerable examples of both the right blockchain technology that's sustainable, bringing great sustainable dApps to bear and assets to bear.
Sorry, Francisco, let me just say, everyone can actually, it's welcome to ask a question in the chat. We're going to try to answer all of them towards the end of the panel, okay? Thank you. You go, Francisco.
No, it's okay. Thank you. Thank you so much, Stefania. So I was going to mention before, Thorsten, you have to make that shares connecting to our API so we can make them carbon neutral rapidly through our pool of carbon credits in the marketplace. So we need to talk about that. So basically, when we started with Climatetrade, and initially when I was in the BBVA bank, and we launched ClimateCoin early 2017. People didn't understand what we were trying to do. No, I mean, basically we were trying to drive funds to projects that do not have funding, and it was a crypto asset. No. And basically, the Climatetrade was the first NFT climate marketplace in 2018. I mean, it was a tokenized assets basically, and they are unique. No, that's the basis of NFT. No, so there, what we end up doing now finally is what we know about the carbon markets is that okay, you become carbon neutral, but you become carbon neutral because your money is going to projects that do the opposite of what you are doing, that is polluting. No, so basically. That is driving money to projects that need to receive that money to maintain that project and to generate a positive impact. No? So basically today, Climatetrade is a marketplace where we put in touch, like from one side, that projects all around the world that generate, that reduce emissions, that mitigate emissions, that avoid emissions, together with corporations that need to compensate their emissions, to need to offset that emissions by buying that certificate, no? Because they cannot do it by their own means. They cannot reduce their carbon footprint to the net zero yet. No, they have a strategy, but they cannot do it. Together with that, we created the first API for carbon in 2018. So for you to see the examples, today we are offsetting flights, we are offsetting car refilling in the gas stations with 2 of the biggest oil companies in Europe. Also for transportation, cargo shipping, financial institutions, also B2B and B2C. So any use case that you may imagine, you connect to our API and all is traced in blockchain, and the end user receives a certificate that states the amount of CO2 that he has emitted for that concrete transaction and the compensation, where their money goes, so you know that your action is making a positive impact at the end. I don't know if...
I think it's impressive. It is impressive. Wow, congratulations, guys. I was looking forward to this panel also to learn more exactly about what you do. And I am so grateful that you're sharing real experiences and real product and solution that you're offering. So thank you. And indeed, with that said, Thorson, can I ask you how blockchain improves the way a securities structure are traded? And again, give us concrete example from your perspective and what you do.
Sure. So My background is the post-trade area, not the trading area. I think generally capital markets, we should divide them into these two fields. Anything that happens before a trade takes place and the trade execution, and then anything that happens after the trade has been agreed. I think it's important, and this is best practices, that actually we separate those two out. The reason is because investors would like to go to venues, exchanges, and trade with counterparties where they get their best price. And this is not always the same exchange. So they need the flexibility on where to trade. And the post-trade area is the place where they safekeep the assets, where the ownership transfer is taking place. So I think it's important that we differentiate between the two areas. In the pre-trade or the trade environment, I mean, we do see in the crypto world very interesting and novel concepts such as automated market makers or decentralized exchanges that are quite interesting, but they sit on, from my point of view, not capital market ready infrastructure at this point in time, because the infrastructure is not compatible with the current regulation and workflows and other areas. But it works well, right? And the cryptocurrency environment is proving that these concepts, or is starting to prove that these concepts could play out and could make a difference. So again, the DeFi space could help us in future really to bring some novel concepts here to the capital market. My area is the post-trade. In the post-trade industry, we have many different types of securities, funds, certificates, depository receipts, bonds, equity, and so on and so forth, a very, very long chain. And all of these securities involve different players, different value chains. And in the post-trade, they all need to come together. Clearinghouses, global custodians, local custodians, transfer agents, and I continue, right? And the blockchain, at the end of the day, is nothing else than a data management solution that brings them more efficiently together. So they have less coordination, less communication between each other, and jointly manage data and rely on golden data records, right? So what we are doing at the end of the day is we lift existing capital markets, such as foreign security investment, onto a blockchain-based infrastructure, so that the intermediaries who hold licenses from the regulators, and only those intermediaries are allowed to perform those functions today, continue to perform those functions, but in a more efficient and a more effective way. So all those transfer agents out there, all those custodians out there that don't know how to connect and seek for ways how to stay relevant in this very exciting future, I think these permission networks give a great opportunity to them.
Awesome. You guys want to add anything here? No? Okay. Then I do have a question here. A lot of people, and including government officials, still struggle to really understand the technology behind blockchain. And in a way, should we educate people more about what it's blockchain and all of its potential? Or do you think the solution might just be to continue this way and then to just prove them that blockchain, it's secure and can be trusted, and it's really the solution as we move forward, also for companies to contribute more towards the SDGs, the Sustainable Development Goal?
Well, I'll jump in quickly. I mean, I think absolutely more education is required. The sort of mainstream narrative on blockchain is in blockchain terms years behind the actual reality of blockchain. If you look at, let's just talk about this panel, a sustainability perspective. As recently as 3 or 4 months ago, the New York Times came out with an article that talked about how bad for the environment that NFTs are. Because on Ethereum, they can cost, not only is the energy consumption brutally high, but the cost to issue is $50 to $80 per NFT. And so they're using Ethereum and Bitcoin as their only case example. And on both of those points, they're factually in the Stone Ages. And the problem is that's the very broad and well-respected publication that's creating that narrative. The reality is, as I talked about, just to give you a sense of perspective, Ethereum on an annual basis uses about the entire energy of the country of Singapore. Algorand on an annual basis uses 10 homes. And like I said, we're carbon negative because we invest ahead of that energy consumption. That's a big difference. And if you look at cost, Algorand launched 4 million NFTs on behalf of the Italian rights music organization called CI where in one day. And those 4 million NFTs launched on Algorand cost $9,000 total. On Ethereum, $250 to $400 million if you use the actual New York Times estimate. So I would just say that education, and I would think, a general laziness and lack of inquisitiveness is driving, just a very simple and misinformed public narrative. So I think it's upon all of us to be on sessions like this to educate, use real data, and then have real conversations about applications. But until that happens, we're going to end up, people will just consume what they see in the headlines. And sadly, what that means is, sadly, it means many people will miss out when all of a sudden the light switch goes off and blockchain becomes the new infrastructure for financial exchange, which is already rapidly becoming. And the people who got in early, like my colleagues here on the panel, are going to be well ahead of the curve. Whereas traditional financial institutions, banks, governments, they are going to be scrambling to keep up. And it's hard to make up. And the history of technology in the world, my last comment, Stefania, is riddled with tombstones of companies that didn't act quickly enough on legitimate technical innovation. And we all know them. Where's Netflix is here? Where's Blockbuster? Where is centralized big iron storage anymore? Cloud computing, no one will use that. And all of a sudden, we're at a point where it is the gap to take advantage and be on the cutting edge of this type of technology is rapidly closing for people who are in the certainly financial space.
But Sean, I want to say, I might look forward for the moment when all financial transaction might be through blockchain. But as of right now, it is highly energy intense. Like, I also come up with some numbers, and they are scaring. Like, blockchain currently accounts for over 0.58% of the global electricity consumption, which is crazy.
Between Bitcoin and Ethereum. And if you break it down by project, it's Bitcoin and Ethereum are both proof of work, and they are at least 90-something% of that consumption.
See, Bitcoin mining indeed alone, like just the mining, consume almost as much energy as the entire U.S. federal government.
That is correct. That is why blockchain as proof of stake and Algorand in particular, that narrative that you're describing here, Stefania, is the narrative that people like to play, but it is very disconnected from the reality of modern blockchains that are launching today.
So you're telling us that this problem that apparently we seem to face, you guys at Algorand have overcome it, and it's amazing. But how about other people, other companies around you? Have they really faced this problem and tried to balance, the long-term positive of introducing blockchain with the idea, actually with the necessity of reducing fossil fuel consumption right now? Like, is this happening around you?
Look, proof of stake networks. I'm going to go to Thorsten, but we should talk about it, Thorsten, I think, because I've been dominating the conversation, but I'll defer to you on this one.
No. All good. I think we all have different perspectives, so it makes sense. John, so I think from my end...
Sorry, I'm saying, I know Algorand is amazing. I mean, the job that you guys are doing, it's outstanding. That's why I was saying, but can we say that it's happening the same thing for other companies?
I think there's a good report out there that speaks in favor of Algorand, but also in favor of some other public blockchains. It's from the UCL University in the United Kingdom and their blockchain intelligence unit, and they compare again the main energy drivers of the bigger blockchains that are out there, including Algorand. And Algorand is pretty, it's an independent research, and Algorand is pretty well positioned there. And that exactly what John has been saying. This report also shows that the proof of work networks are the worst from an energy point of view and from a sustainability point of view. But even in the proof of stake context, there is big differences between public networks. And also what has to be said, what I'd like to say from a pure sustainability point of view, again, permission networks that are not suitable for all use cases, right? But where they're useful, and this is the educational part that I would like to throw into your question here, Stefania, private and permissioned networks are even more efficient because again they can be tailor-made for a particular case, and efficiency is not only stemming from the consensus protocol such as proof of work and proof of stake. It also stems from the hardware that is being used and how it's being used. So it's unfortunately not that easy to even calculate those numbers. But anybody who's interested in energy efficiency around blockchain, I point over to this great study from UCL.
Awesome. Thanks. Francisco, you want to add?
Well, just one quick thing that I think that what you need to see here is the evolution of blockchain. No, I mean the evolution of blockchain is toward a less consuming blockchain, less polluting blockchain, and clearly we have examples. Obviously, Algorand is leading the way, and then we are seeing the other blockchains that today they know that they are doing something that is obsolete. They need to move towards that procedures, and that's what's going to happen. I made an article based on Bitcoin is the first, but then it's going to be the definitive. So we need to be moving towards innovation. It's like whenever the internet came up, and obviously then there will be the first companies that came out, and where are the Yahoos now, or where are the different? I remember Ole from the first search engine in Spain called Ole, and then Terra, and they are gone, So that's gonna happen the same, I mean, I don't want to compare this with the internet, but I mean it is the same situation.
Yes, I want to just briefly jump into something else. Sustainability is also about the company culture, like most of you have said, right? And company culture also means team management and the way things have been organized inside the company. So how can you measure sustainability as a competitive advantage when it comes to internal culture? And also, how do you generally measure at your specific firm sustainability? Not in terms of product.
Well, that case is for me, more or less. But I mean, in terms of, I'm used to work with companies that, I mean, in any calculation, that the first thing one company has to do is to calculate their carbon footprint, and obviously to know how much they are polluting, So there are three scopes. The third scope is the one that is referred to the employees, providers, customers, because there is indirect carbon footprint you have from them, So there are a lot of companies that are already measuring. It's not that easy, obviously, because we need to introduce more tools in the market and new startups that are helping with this and new softwares. But obviously, every company at the very end is going to make processes for knowing if their, let's say, employees are coming to the work by train, by bus, or how are they coming, and which is the carbon footprint around that. So. And it is very important because now the companies need to report about sustainability every year. In Europe, it's mandatory. Companies for more than 250 employees, they have to report sustainability every year. The non-financial reporting, we call it. And soon will be in other countries. All the listed companies, of course, they do it already. But so it is a process that it will be internally the company. There are even gamification processes for the employees to be able to help with the carbon footprint improving of the company.
I'm Francesco. I'm a bit more, I should say, skeptical about company reporting their carbon kind of goals and impacts and everything. Yes, for sure. There's even an intelligence think tank from the world leading central banks that is assessing what companies say the Russell 3000, the companies in the Russell 3000 index, what they're reporting on. And yes, there's more being reported on from companies in terms of how they, what targets they set themselves, but very little information about what the impact is on business, what the impact is on strategy on these things. So I think from an information point of view, not enough is yet out there, and I think we should improve for this. But again, this is probably a separate conversation. For my, sorry, you wanna?
No, it's just no, because it's just starting. No, I mean that report is just starting. We created in Spain with the Stock Exchange of Spain. We created the first blockchain registry for carbon credits, and at the same time for reporting. So you need accountability of all that, and you don't have tools to do it. Everything is manual. They were doing it with Excel files. So
Absolutely.
we need to bring that technology. No,
Yeah.
and that's why I think that we are in the good way. We need to go faster because we don't have too much time, but that's the right way.
Absolutely.
I love
And
it.
in,
I love it, the idea that we need to go faster, indeed. And so you touched base on green bonds before, Francisco, and now on carbon credit. So why don't you tell us more, also with a concrete example about what it means to really offer a digital security like a carbon credit as an alternative that is way more accessible, sustainable, and efficient.
Can you repeat because you cut a little bit the last part? You said that compare bonds with
Sorry.
carbon credit. Then no.
No, I said you first touched base about the traditional financial industry creating green bonds, and then you mentioned about carbon credit. So why don't
Mhm.
you tell us more about what it means to create a digital security like a carbon credit that can offer something that it's way more accessible and sustainable and efficient to drive change?
Well, I mean, green bonds are a great also method. I mean, it doesn't have to be, but the problem is that the generalistic, you cannot call green bond to everything, no? And whenever when all the companies start changing their bonds and calling to every bond now green bond, and that has to really change a little bit also because we need to call green bond what is really a green bond because but there were not too many places where to put money to call it green bond, no? So that's why they were jumping to the new hype of saying, "Hey, this is a green bond." No, what happened? But in terms of the carbon credits at the very end, the difference is what we are doing, and I think it's gonna make the difference is to be generating. I mean, today you have processes of what is called MRV, measurement, report, and verification. You have to bring a certification company in field to see if there are that trees that these people is saying that are planting, how many trees are certified that, then go to a standard to verify that. And probably the process can take to 1 year to 6 months to 1 year to generate a project and be able to sell that credits. No? What we are doing, introducing blockchain, introducing the new technologies, is bringing digital MRBs, digital measurement, report, and verification, so we can have data from satellites, from even drones in place, so we can bring that data to the digital MRBs and bring that outcomes directly, sometimes in real time if we have smart meterings, to the registries and then to the marketplace, and then sell them in the marketplace and cancel them automatically in the registries. No? So that's the process that we are working on digitizing all this, so making the climate action much more rapid because we need that now. We cannot be waiting for projects to be funded 1 year. No, we need to do it fast. No?
Absolutely. And Sean, come on. Algorand is really leading innovation in the blockchain. Blockchain has the ability to simplify complex process, to create cross-border transaction, and you guys continue to, even if new players coming in, you continue to be leaders and continue to innovate. Can you tell us more about the key of this success? What is the recipe?
Well, so I think there's a couple of things. It's very nice of you to say that, by the way. But there's a couple of things. One is when we built. If you go all the way back to where blockchain started, I think there were different approaches and different goals used as the reason to sort of launch a blockchain, and many times it focused on the cryptocurrency, and the market had a number of dynamics associated with that behavior. I think as new blockchains like Algorand came along, we brought with it, I think, first of all, and I've been in tech for a long time. Like, I'm old. This is the best technical team that I've ever worked with, top to bottom. These are people that are, geniuses and luminaries in their own right. So the focus on tech was critical. The focus on building real product was critical. Bringing sort of old school product delivery of let's make it usable, let's make it simple, let's make sure it works. And Algorand has not experienced even a millisecond of downtime since we launched in June of 2019. And if you read about the industry, that in and of itself, sadly, is a rare factor. So I think that, it was one, make sure the tech is great. Two, long-term view. So how do you think about building an economic system that has in it the right infrastructure, the right partners like Climatetrade, the right opportunities for people to innovate and build and create, sustainability as a part of it. And so everything we've done has been really built with a long-term enduring value lens. And you'd like to say, well, that seems very obvious. But again, in the blockchain space, it isn't as obvious. And finally, we have real people that work at the company. So if Francisco needs someone, Francisco can call me. It isn't a referral to a dev site where you hopefully have some engineers in your shop that come from traditional financial institutions or governments that can just figure it out. We have real people. So we've blended this sort of traditional product delivery and tech approach with sort of this new digital blockchain world. And I think because of that, we've seen continued traction over time. Now there's over 900 projects that are building on top of Algorand, and probably 3/4 of them come from traditional finance and or the crypto native DeFi space. So we're just going to stay the course and continue to deliver for the people who are in our ecosystem. That's it.
Thank you. Amazing. Thorsten, also, you're going after a very traditional financial institution base, right? So I really want to hear more about maybe some of the challenges that you face when you talk to these people. How do you describe them, the benefit of blockchain? Is that a huge effort, or do you think the conversation now is going better and better because they're way more educated on this?
It requires education, but the level and the degree of education is improving, right? If I compare this way back with what we had, the conversation that we had in 2015 versus the conversation that we are having now, right? Very, very different, yeah. Well, I think if we speak to newer players that enter this market, I think the blockchain is such a generic topic that we need to bring it down to something practical, right? And something that we can actually discuss. So in a securities context, I usually advocate identify a particular asset class, right? Carbon neutral shares, American depository receipts, whatever you have in mind. Identify an asset class, then understand what is the applicable regulation, then understand what is the relevant value chain to bring that asset class into or onto a blockchain infrastructure. So once we have identified a strategically relevant asset class, then we can articulate the benefits of blockchain in the financial context. The reason, one main reason is because certain asset classes have different problems, right? Certain asset classes are super paper-based, right? And slow, so the ownership transfer is slow. Other asset class might be more efficient, and there are other angles. So we can't really say that blockchain is one solution for everything, and we can't really say blockchain on average always reduces transaction costs by 20% or 48%, which some of our networks result into. But you need to make it concrete, and you need to find a use case that is relevant to you. So yeah, we've been going a bit off tangent, the sustainability, I guess, topic, but I think this is foundational for the understanding of the technology.
I totally agree. Guys, we have questions from the audience, so let's try to answer them. I'm going to read it, all right? So the first one is blockchain provides for business continuity due to decentralization. I do not see a real example where blockchain brings in green tech or a carbon neutral environment. Can you discuss that? Now, I do think we have discussed it, so why don't we do this? Just one, we did. But let's say, just to summarize it, one line, each one of you, about how we are and how you and your company are bringing green technology towards carbon neutrality. One line, each of you, if you want to.
I would say invest in the technology and use that technology in which you've invested.
Yep. I think that's again, my business is a software company, so that I would side with that. Carbon neutrality has two sides. It's you need to improve your own internal organization. So try to apply more carbon efficient techniques and software. And on the other hand, anything that is residual, you can offset through whatever, for instance, the offering that Francesco is bringing to the market. So, but first and foremost, I believe we should be investing into changing our existing businesses and then only offset the residual. That is long-term, the even more sustainable path going forward.
Cool. Francisco?
Well, I think I mentioned it before, no, but from our side, the things that I will be more proud of, and it is about bringing, channeling funds to that people that needs to generate new projects that can change the world and can change the way we do things, decarbonize the world, avoid plastics in the ocean, avoid chemicals in the ocean, and all that. No? And I put you one example we are very proud of. Brazil, we support projects of waste to energy. They get the landfills that are full of garbage that the mafias don't control properly. They don't do the sanitization. They move it to places where are sanitized. Then they cover it so the methane doesn't go to the atmosphere. They get tubes so we don't get the methane out of the atmosphere, and we get biogas to power plants, to power anything you can imagine. You generate electricity and you generate credits out of that. So you fund new projects with blockchain and with the carbon credits, obviously, through that. So that's the type of things that generate, in my opinion, positive impact, because you are avoiding emissions and you're avoiding a big problem that is the garbage and the waste in Brazil. So that's the type of things.
Amazing. Guys, we have a very specific question here. Can blockchain be used to bring transparency and accountability to the ESG commitments made by corporation and institution? Now, ESG, for some people that might be here and attending the event, it stands for environmental, social, and governance. Who wants to go?
If you want Thorsten, I don't know. Maybe.
Either way, I think you are you're on the forefront of the offset side. You kick off and I comment after.
For me, it's like in the ESG space and the reporting that I was mentioning before. No, I think we mentioned it. No, we need to account that. We need to account that emissions of the companies. We need to account all that data that we have, in order for the governments, because this is inside of the Paris Agreement, and I agree with this. The governments made a commitment to achieve zero emissions in 2050. So we need to know how much we are doing year per year. No, so we need to account that. So all that reporting that we are doing needs to be accounted, and blockchain is the perfect element to provide that transparency, but at the same time provide the security of the data. No, so that's in my opinion.
I would add, all blockchains have one weakness, whether these are permissionless or permission blockchains like ours or Algorand. And the weakness is always the gateway, right? What is the data that you put in, and what is the data quality that you put in, right? So I think what is critical. Yes, we can support. In theory, we can support the ESG reporting. Reporting standards and data in order to support investment processes, but it's utterly critical that we have adequate auditing and adequate data reporting. So, for instance, on the offset side, it is critical that we certify projects, and here we still need to do a lot of work overall as a community and as a society, because when I hear and when I speak to some corporates, they even look at only certified projects, and out of 65, these were concrete numbers that I came across, out of 65 relevant projects they've identified, only 5 of them were relevant and were of good quality to them, right? So upfront certification is being done. Good amount of work is being done there, but it needs to improve. And then whatever the certification output is, that can be stored immutably on a blockchain. But again, if the certification process is not adequate, then you have garbage in, garbage out, so to speak. The second aspect is, once you record your footprints, or once you record your maybe audited footprints, or once you record your audited offsets, What is not practice, and we should introduce as practice, is that we continuously revalidate whether those offset projects actually produce results, right? Sometimes perhaps you have invested in a forest, right, in California, and the wildfires have wiped away the forest. So where are your offsets now, right? Where are your credit? So from that point of view, an ongoing, not just an initial certification, but an ongoing validation is absolutely key. And the output of these efforts that can be stored in a trusted and a reliable way, but the gatekeepers who put that data in are responsible for this. I think this is the critical part and critical point for any blockchain application. So I call them the gateways into the database.
Gateways.
I totally agree with Thorsten. There is, in fact, there is one thing in Europe that they are using, and there is a big project there that all the financial institutions, they use the same reporting system. So there is a project using that reporting system of the financial institutions, but in the green space. So there is a green reporting initiative of the European Union that is extendable to all the financial sector worldwide.
Indeed, and as the third European here, I have to admit, the European Union is really moving towards sustainable disclosure, sustainable project, allocating money and resources to this, which is really great. But in America, we also have really great examples. And probably, Sean, you can answer this question. So Elisa is saying there are companies doing GPU mining using alternative energy sources like solar, wind, geothermal. How can we distinguish those from the one that are actually just doing mining? Fossil fuel mining.
Well, I think so. I think, look, there's certainly, leveraging, sort of sustainable energy sources makes sense. I mean, El Salvador famously is working on geothermal power to provide for Bitcoin mining. I think that's a great innovation. I think more interestingly would be if you created blockchains instead of bolting on that capability, actually built blockchain technology with renewables in mind from the very beginning. I think that's probably a better strategy. And I think, but certainly if you can use, wind, solar, or geothermal power over fossil fuels, you certainly get some points in the right direction, I would say, for sure.
Awesome. And with that said, guys, I wanted to thank you. I think we have provided amazing insight about what your companies are doing and how you guys are leading innovation in blockchain towards sustainability. Some key understanding also what is coming next. And so with that said, I really wanted to thank you so much. I think, we can probably close with one line each if you guys want to go. And then I would recommend also everyone to keep following the FinTech Week because there are a lot of amazing panels still happening today. So who wants to go first?
Sean line. Is the best.
All right, here's mine. No excuses. Investigate and learn about the technology and invest in sustainability because you do not have to make that trade-off anymore.
Love it.
Well, I like to say always the same. It's a problem that we have, all of us, no? And we have to make small efforts, put it together, makes a solution. So I think that we have to work it out together.
And at the end, so thanks for having me again, everybody. It was great to have the discussion with you, Francesco, Sean, and Stefania. From my point of view, if anybody in the audience is interested in learning more about carbon neutral shares and is potentially an ecosystem participant of that, we'd love to hear from them. If you're interested in more efficient foreign securities and public securities, and you'd love to learn more, please do reach out to us at KALYP. I'd love to continue the conversation with everybody here.
Awesome, guys. We don't have more time, but thank you so much, everyone.
Stefania.
Thank you.
Bye, guys.
Nice to meet
See you soon
in
Miami.
Talk soon, Francisco.
Bye. I'll see you soon. Bye. Nice to see you guys.